All righty, guys. This is Mike Bonadies with another SJREIA webinar. Thank you, everyone, for hopping on. Before we get started, I want to tell you guys all a little bit about the SJREIA organization and go through some of our disclaimers. So, SJREIA is New Jersey's largest nonprofit real estate investors association. And if you actually look at other REIAs in the New York and North Jersey and Philadelphia area, I believe we are the largest REIA in the tri-state area, which is pretty impressive. We've got over 850 members, and I believe the slide's actually a little bit outdated. We're in the 1,000 mark. So we've got a lot of great individuals who do business in real estate in South Jersey REIA. It's, at its core, it's a organization that gives out education about real estate, but it also allows individuals who are involved with real estate to network with one another, but that's not the only benefits it provides. There's a lot of business affiliates and also suppliers and vendors that provide benefits to SJREIA members. And I've got up on my screen here a couple of those benefits that come with SJREIA. There's the Home Depot discount and rebate program. I'm a contractor. I have construction crews. We go to Home Depot all the time, and Home Depot actually offers 2% cash back on anything spent at Home Depot throughout the year if you're an SJREIA member. So if you spend a couple $100,000 in Home Depot, or even $50,000 or $60,000, there could be quite a bit of significant savings that gets sent back to you every year, which is pretty awesome. Additionally, SJREIA has a website and a Facebook group that you can promote your property. So let's say you're a wholesaler, or maybe you're a landlord and you're just trying to exit a property. You can talk about your properties on these different forums and potentially sell them on there. And lastly, we also have a new benefit with AAA for NJ residents. So if you're an NJ resident and you want to use AAA, SJREIA does have a discount program with them. So if you're interested in learning more about the discounts that come with SJREIA membership, email info@sjreia.org and they can tell you more about those benefits. So, like I said, SJREIA, there's over 850 different members. There's a lot of people that are involved with real estate, like the people that you see on this webinar today, as well as others. And it's a great area to meet and network with other people doing business in real estate. So not only do we have these webinars and these meetings, and eventually when COVID starts to go away more, we'll have in-person meetings, but there's the SJREIA chat forum, which is a group, a activity that only SJREIA members can participate in, and individuals can talk on the forum. And let's say they have a question about Gloucester City or another thing that's super South Jersey specific. You can ask that on our SJREIA forums, and other people who have done business in that area will answer you back. I mean, I know that I've seen a lot of people use it and reference out contractors and or work in those particular areas. So if you're an SJREIA member, you can use those benefits. And then right now we have a Saturday morning member meeting hosted by Mark Van Zora. This is like a mentoring meeting. It's something very unique just for SJREIA members. Usually there's spots for only like 14 and 15 people, and it's really intense conversation about very specific items. So if you're an SJREIA member and let's say you want to know how to get ahead more in business, or you want to talk about your specific thing that's going on, you can attend these Saturday mornings, and it's very open. Everybody dives into each other's business and really discusses it, talks about how to get ahead, and it's pretty neat. So that's an SJREIA member benefit if you want to join these Saturday meetings that are all about diving into your individual business. If you want more information on SJREIA, please contact info@sjreia.org. Our numbers right here on the slide, 856-663-1133, or visit www.sjreia.org. Lastly, I do need to give a disclaimer before we get started on today's webinar. SJREIA does not exist to render and does not give legal, tax, economic, investment, or financial advice. SJREIA disclaims all liability for the actions or inactions taken or not as a result of communications from or its members, officers, directors, and employees. We do give out education out here, but ultimately your business, you have to consult your individuals. So your CPA, your lawyer, your attorney on your specific cases. And that's what you should be doing anyway if you're trying to drive a real estate business. So without further ado, let's get started in today's topic. We've got 4 awesome and tenured individuals in the hard money sphere that's here to talk about hard money lending in regards to New Jersey, South Jersey, and real estate. All these guys, I know all of them through different ways, and I've done business with a few of them. They're absolutely fantastic individuals, and I think hard money is a very important topic to cover and to know if you're a real estate investor. I know when I was starting out in real estate investing, I used hard money to grow my wealth exponentially and get into deals that I might have not necessarily been able to get into if I just used my own cash. And because of that, I was able to grow my real estate portfolio, and that allowed me to do more deals. So we're going to talk about what is hard money, how to use it, what are the right deals, what's a good customer for hard money, all these great topics that are really prevalent. So without further ado, I want to let these guys introduce themselves, and I'm going to start off with Matt, since you hopped on first. Why don't you start there, and then we'll move to Martin and Ian.
Yeah, absolutely. Thanks, Mike. Matt Weber here with Alpha Funding Partners. I handle all things business development, sales, marketing for Alpha. I've been with Alpha for the last 5 years. It's been an amazing journey. Alpha Funding Partners is a private direct capital partner. So we are considered a hard money lender, but ultimately we own and manage our own capital. It allows us to be very, very nimble and also flexible. In certain cases, we have a wide array of product offerings. We would consider ourselves a relationship-based lender. Along with all of the short-term lending options that we have, we also do have some rate and term non-qualifying mortgage. If you're looking to get a non-QM loan for a rental property, we have that. But we're a local lender. We understand what the investor does. A lot of our people on our side are also investors ourselves, so we understand what the investor needs, and we started as real estate investors, and we've grown into this capital partnership, and we've kind of grown Alpha over the years. But just really happy to be here, and I appreciate having me on, Mike.
Martin?
Great. Okay, so Martin Chera here from Express Capital Financing. I happen to be the owner of a company. I work with my 2 sons. One of them is David, happens to be the underwriter, and my son Max happens to be one of the loan officers. We're based out of Brooklyn, New York. We're nationwide. We are direct also, and we help investors grow their wealth in real estate, whether it's short-term or with our long-term permanent financing products.
Awesome. Thanks. And Ian?
Yeah, thanks. So thanks for having us. I appreciate you guys putting this together. So we're a little bit different, I think, than most hard money lending companies and private capital. Our background, so I got in the business about 12 years ago. I actually was wholesaling property. So I was an investor first, used to wholesale a couple hundred deals a year, and then built that into a management company and sold that. And then I had some partners in Maryland that were deploying capital. We never took on any institutional funding, so we remained private in the way we lend. And I guess the space that we end up fitting into for most people, maybe a little bit different or maybe not, I don't know, is that, people were kind of famous for like our 24-hour closings or, same day approvals, no appraisals. It's just a little different than institutional capital, but, it can come at a price and a cost. So it's got, I think both sets of funding have a place in this business, and there's plenty of deals to go around. So, but that's my background, and I was always an investor first, and I've had conversations with both the guys on here. We have good relationships. So, yeah, I just appreciate you guys having us on this panel.
Awesome. Thanks, guys. And just so everybody is aware of how our format's going to look, we've got a bunch of questions prepped up ahead of time. We're going to ask these individuals these questions. We're going to have a great conversation. And then if anybody has a question, there's 2 ways you can ask a question on Zoom for a webinar. The first is if you're looking at your screen and you go towards the bottom of the video, there's a chat bubble. Click on that. You can ask your question there. Additionally, there's something called Q&A. You click on that, you type your question, and then we'll be able to see what that question is. Once we get through a good portion of the show, I'll start asking any questions that come up from the audience. So I think, I mean, it's great that you guys already started to get into the first question before we even got started here. I just so that everybody's on the same page and everybody understands where we're starting at, I want to know what your guys' definition of hard money is. And I think you already were starting to play at it because you do have some institutional-esque hard money and you got some actual hard money. And I think it's worth diving into each of these things. So who wants to take this question to start off with?
We'll just rotate. So yeah, it's honestly, like, it's just a stupid term in our industry. Everybody says hard money, but like we're all three of us are a form of private money, hard money. It's just a term that when you Google it, it's going to be a famous one that pops up. So the reality is, we're not banks per se. We're not, we don't do owner occupied, or at least I don't know if you guys have any products that do that. Like, we are investment commercial based lenders with private capital, and however you want to call it, phrase it. It's just what, back in like the 50s or whatever, when the mob was like lending out hard money, right? 15 or 20%, it got termed hard money. So it's just the space we're kind of in. I always tell people, like, call it soft money, hard money. I've heard it called slow money. I've heard every term in the business for it. So yeah, that's what I got.
Yeah, I'm going to jump in real quick.
Okay,
go ahead, Marty. Yeah, go ahead, Marty.
No, I'm saying, also the hard money word, the phrase came in because it's a hard asset. So it's not a hard process. It's all about what it is. It's a hard asset. And that's how the phrase came into effect. But for everybody out there knows what it is or doesn't know what it is, it's a really smooth, easy process. It's just providing high leverage, low deposit, low risk for the investor in order to be a successful flipper and make his profit. So that's really what bridge, the actual word was bridge years ago. Bridge, because it's just a bridge to the next phase of the deal, whether they're keeping it or not keeping it, or value it or flipping it. So that's how it first came about.
Yeah, and to piggyback off of you, Marty, with the whole asset, right, the hard asset, this is an asset-based loan. Now, I'm going to say that, and I'm going to tread carefully because we get these phone calls all the time. You guys are an asset-based lender, right? So I have 520 credit, and I don't have any money, and I don't have any experience, but you'll lend to me, right? I just need like $200,000, just right. It's just as long as the deal fits, as long as the deal makes sense. You guys are an asset-based lender. What people don't realize, and if you're on this and you guys understand what hard money is, or if you're just starting out, the borrower, our investor, and the actual deal are one. So people always think of the actual deal, but they don't always just think about themselves. They are the most important piece of the entire project, because you could have an amazing deal and the operator can ruin the deal. And you can have a really, really bad deal and a good operator can hopefully save it and get it across the finish line. When we are investing in you. So you are an asset along with the actual project, with the actual property. But yes, we're considered an asset-based lender, but the hard money loan or the hard money lender, like you said, we're lending on a hard asset. We're lending on the property, but ultimately there's somebody who's going to be the operator. And a lot of our investment is making sure that we feel comfortable with the operator as well.
That's a good point. I think Matt's got a really good point there. I mean, so I think people get, like you said, 5 for 20 credit score, 200,000, can you give me 200 grand? I think part of that is just like, it's hard from where we sit to explain that in a marketing session to somebody, to say, don't, this isn't going to work because, there's a lot of risk. You're bringing a lot of risk to the table. So I don't know if you guys use this, but when I'm underwriting and so forth, like the 4 C's of like hard money, right? Like cash, credit, character. What the hell's the other one? I don't know. But character is a factor in what we're looking at. So you could actually have, it depends. Each one of our companies is gonna be a little different in our comfort level, but like I've definitely done deals with guys that have 520, even under 500 credit score, but I have a lot of confidence for another particular reason in what Matt said earlier, which was the operating ability. There was something about them that particularly made their execution level at a level that may be comfortable with the scenario. And I think that's really important. And it's really hard for the borrower on the other end to call you up have a great deal, and then you're thinking in your head, like, I've got red flags all over the place. This person couldn't execute on a cup of coffee. And you're thinking that in your head going, what do I do? But the truth is, and you guys I'm sure would agree with me on this, in the event that we turn a deal down, we are saving you money, a lot of money. It's not because we don't want to do a deal. Every one of us in this call could fund every deal if it's a real deal with a good borrower easily. But the problem is we say no 20, 30 times a day because we don't want you to lose money. And we don't want to lose money.
It just doesn't make any sense. It's not profitable. And like
on
you
either
said, the
side,
borrower
for either
having the
person.
capacity to close to execute the flip.
Yeah. So
Mike, I know I'm jumping on this, but I just can't help myself. The one thing that I think so many people should take away is that we are your partner. So I use the word capital partner, and that's something that Alpha takes a lot of pride in, is that there's a true alignment of interest. If you don't do well, we're not happy, because ultimately for us, we want volume, we want velocity of deals. We want to see you do 10 deals, 15 deals. A lot of our business is continual business. We work with you, we lend you the money, you finish a project, you want to do another one, and we want to have that nice positive circle going with with loans. But if you don't do well, ultimately, then potentially that's not going to work out for us. So when we're sometimes looking out for ourselves selfishly to protect our capital, that also is protecting you, because ultimately, if it's bad for the person lending you the money, it might even be bad for you. But for us, obviously, ultimately, we want to protect the capital, but we also want to see, our borrower and our investor, be in a profitable deal, but also a deal that we're comfortable with from a risk level.
And just, to add to it, Mike, I also like, a lender is your second set of eyes. So, that's very important for every investor to realize. It's not just the capital, like Matt said, it's about having that second set of eyes and being your partner to make sure that you're going to be successful on the deal.
Yeah.
Absolutely. You guys brought up so many good points here. I mean, if could one of you walk us through an example of like a potential hard money loan just for the audience, and then we can talk about what are good deals that make sense for hard money. But what, like, for the uneducated person, what's an actual like hard money loan look like versus a conventional loan? Maybe if you could reference that.
So
go ahead,
Martin. No, I'm saying, so, we're providing for the advance rate or the leverage on that purchase. A bank is not going to lend you on an empty property. A bank is not going to lend you on a property that's got no cash flow. They're not going to give you the rehab. So they're not looking for anything like that. A bank wants, cash flow. They want a property that's already completed, rent ready, has a certificate of occupancy, all ready to go. So that's where hard money comes in. And, as investors, all of us ourselves, the less you put in, the greater your return on the investment is. So if you got $100,000, better to put it into 5 deals and diversify than to put all your cash and maximize your risk putting it into one deal. So that's what hard money is all about. It's about leverage, OPM, other people's money. What's a successful deal? I mean, I'm sure, everybody will agree with me here. We want to see profits and the execution of the flip, but at the same time also, we want to make sure that the return on the investment is good. Sometimes I tell my investors, like even today, I had a guy who's going to make 10 grand being 8 months. I says, why would you want to do that? It doesn't make any sense. So like Matt said, you got to be transparent. You got to be open with them. We'll lend in the capital, but it just doesn't make any capital sense. Why would somebody do that?
I think also a big difference is the speed. I mean, I'll just, you guys touched on a lot of really good stuff, but the big difference is if you got to get this property, you got to close on it in 2 weeks. There's no way you're going to a bank and closing this thing in under 30 days. So if you need to close quickly, and I think that's something that, you get a wholesaler that brings a deal to you and you got to close in a tight time frame, or you're working with the seller and you got to close in a week or two. There's no way you're doing that with a bank. The only way you're going to do that is with someone private, and we're professional lenders in the private space. So that would be the biggest difference, is I think just the speed. We can fund quickly and less red tape.
Yeah, speed. I mean, that speed is why a lot of people call it less red tape, and speed is a good way to put it. I think for an example of a deal that you had mentioned earlier, let's just take like a flip deal. Somebody comes to you, they're buying it at 100, they're putting 50 in. Any of us are lending any different kind of capacities depending on what it may be, but you could end up bringing nothing to the table if you have cross collateral or something like that. And you can end up bringing, depending on how we analyze it, but if I'm analyzing it based on the ARV and I think your ARV is like 180, you're going to bring a lot of cash to close. If I think it's 300, you're going to bring a lot less. So, but I'm sure you guys see deals like that, right? You buy it between 1 and 150, put 50 to 100 in, and everything in that range is pretty fair game. And then you come to us, and then the way we do it is we typically do like a draw disbursement. So we'd escrow the 100% of the construction and release it in phases as it comes up, and usually have a year to pay it back for a typical like flip. But like bridge loans and stuff like that, you can kind of get into like maybe like 5-year notes with us. I know you guys also have some, Martin and Matt have longer products as well like that kind of maybe makes sense for certain projects. But that's your run of the mill deal that you get a call on. The reality is most deals aren't deals.
But just to add, coming up in January now, the moratoriums are over and the foreclosure courts open up, there's going to be a greater demand ever so much of hard money, where you're getting that, high leverage and that low deposit down with so many properties coming up on the market very soon. So it was very popular in 2007, 2008, and it's going to be ever so popular coming up in the next month or two. So if everybody could just sit tight and grab that money from any lender and grab your personal money and get it going and making money in real estate.
Yeah, it's a weird surge we're about to hit, isn't it? So the 2007, 2008 was, everybody was you weren't buying a house unless it was a foreclosure. I remember being during that time, it was like everything was foreclosure. This is a weird one because the world has been locked down. So now you're going to have this unrealistic flood of foreclosures hitting the market. I mean, it's not a long-term thing, right? It's not going to sustain for years of foreclosure, but you're right. Like, I'm very curious to see like, how does that impact? Is it a month long? Is it 2 weeks long? Is it like the only thing we hear for the next 6 months? Who knows? I don't know. It's unknown territory.
I like that you guys are ambitious and you think that the foreclosure court's going to open up in 2 months. As a landlord, I'm right now betting that at least on the eviction moratorium, which indirectly affects foreclosures, I still think you're looking at 4 to 5 months before things get hurt.
It could be. I guess I'm just speaking to those floodgates in general to say, like, what does that look like when they open? I think Martin's right. I think there's going to be something. I don't know what, and I don't know how they're going to is it going to be everybody and their mother's going to become a sheriff sale buyer for a minute, or, is that going to, or are they just going to get only sheriff sales get bid up, guys, I'm sure you guys have sheriff sale clients that are just like, everything's overpriced. I can't buy anything right now. You get that all the time. I don't know.
I'm going to diverge for a little bit because I think this is worth going into. Some hard money lenders have institutional funding from like places like Temple View Capital or the JP Morgans of the world. And I'm wondering, from your guys' experience, if you have underwritten loans that's conduited money from them, have those individuals been cooperative, or have those foundations been cooperative? Given the circumstances of COVID. And I mean, from a flipper's perspective, I think most stuff is selling. I know from a landlord's perspective, some people have gotten burnt. I'm really curious to hear if the institutions that back some hard money have been flexible during COVID.
Yeah, I mean, I'll just jump in. We don't sell any of our notes. We hold all of our paper. We service everything. But what we did notice back in March and April was we put out a survey to all of our borrowers. So if someone came to us and they were experiencing some form of hardship, we had them fill out a survey. We wanted to work with them. Ultimately, like I said, we're a partner. We want to work with them long term. We're not here to just beat them, kick them when they're down. So there were some exceptions that we did make ultimately because we do have a little bit of flexibility. But I've seen that over April, May, I would say almost June. I think things have kind of calmed down. It was really that I think some of that fear in April and back in March when we saw some of this that was coming up. But yeah, we were flexible with our borrowers and we've seen some good responses out of it. But draws are moving, payoffs. We're seeing that houses are selling at all-time highs. It's been fantastic with all things considered.
Good. I mean, same with us also. I mean, yeah, thank God our note, listen, one or two of them paused for March, April, and May, so we just paused. But they're back up and running and everything, so everything is fine. And very similar to Matt, we work with, one of the, and it's very important with any lender you're going to, they could offer money, they rate points and everything, but it's more about the service, the reliability, and the communication. And like, Matt did say, when you're building that relationship on both sides, an investor lender and a lender investor, you want to make sure that you got their back as much as they got your back. And when you're working with them and you're communicating with them, that's most importantly. And you don't want to work with a predatory lender that's just going to lend you money and have that mindset of taking back the property. So that's why a good lender is going to watch your back, have that second set of eyes and all that. But the market has opened up. A lot of the people that I was told that were out are back in also. So it's getting, like I said, there's going to be a great demand of hard money over the next 2 or 3 years while we're in this recession or going into recession. And, with this pandemic hitting us all over, a lot of emotions came into play. Landlords want to become landlords want to become tenants, tenants want to become landlords. People want to move to the suburbs. People want to move bigger, smaller. So a lot of crap is happening, and especially the low interest rate. So that's driving all this inflection.
Yeah, as far as the question about so we don't use, I've never used, we're just strictly private in terms of the way we lend our funds, but we keep pace with, I keep an eye on, what's going on with Templeview and those, the bigger institutional guys that deploy to other companies. And I'd say what those guys said is what I saw the pulse at the time. I'm not as intimate with it because I don't have a relationship with those. I know the companies, I know the people that work there and so forth, and they know us, but we don't actually accept money from them. So, but what I did notice was during that, like Matt said, during those first 3 months, there's a lot of fear in the air, right? Literally everybody locked down and was nobody knew if we were all about to die. It was crazy, right? And that was the reality of the situation. It sounds nuts right now. And they're talking about another lockdown, and it's wait a minute, whatever. That's a totally different topic. But the reality was during that time, I had multiple local lenders, and I won't state their name, and it wasn't either of these guys, reaching out to me going, look, can you buy my book? Or can you buy off these notes? Because, at that time we were, one of the only guys operating. So they were calling going their balance sheet was closing in Templeview and I forget the other big one, but they were halted, and I was oof, that's but obviously something has occurred because I didn't buy their book off. So somewhere between June and now, those relationships must have stabilized and been okay. So I would say from an outside perspective, just keeping a pulse on it, that, people are in business, people are in business and they're funded, and I'm happy for it. I like the idea. I like when people are in business around me, and, as much as you kind of think you want to be the only game in town, it's not really, it's not good. It's not great for the industry to be that way. So, but yeah, that's my understanding of what occurred there.
Great info, guys. This is awesome. I think there's been a question that came up, and it was also a question in our and what we were prepping for. And we're going to shift gears a little bit here. Who's the ideal customer for a hard money lender? You guys talked about character early. You talked about your experience. Talk to me about what you guys are looking for when you're looking for people to lend against.
Yeah, I'll take a stab at it. It's I think you can look at it from both lenses. The first lens is you're a new investor. You want to get into real estate. You want to invest in real estate, and maybe you don't have all the money to invest in a project, and you're looking for a partner. And you could raise money. You could maybe have a private lender come in with you. But for us, like you said, we're professional lenders. We can be a capital partner with you if you're just getting started. If you don't mind putting out, whatever the interest rate is, the points, if you can make sure that the numbers still work with the financing, it's a great way for you to get in with I would say, relatively little skin in the game in the grand scheme of things. But also as you scale up, we've also seen that a lot of experienced investors have come back to use us because they understand that they can leverage and they can scale using our funds, or maybe, we can build upon what we've done with them with, say, just fix and flip. Now, all of a sudden they're looking to do maybe some horizontal or vertical force appreciation or new construction, whatever it may be. They want to invest in commercial real estate. We can grow with them. So I think for us, the ideal investor would be anyone who, I guess, based on how their capital is set up, if there's need for it, I always say, give us a call and we can always take a look at it and see if there's a need. But ultimately, if we can provide that leverage for them, I mean, we work with experienced people, but I would say also, a lot of hard money lenders, they'll work with some newbies as they're getting started.
Yeah, I usually, I guess the ideal client for each one of us is probably going to be a little different. Like, like Matt said, Matt probably experiences more, seasoned investors than I do. I mean, I have definitely some seasoned guys, and sometimes I'll have guys that call me up and I'm like, that's like an alpha client. I'll just say, hey, you need to call Matt Weber, and that's it. Like, I just know it's not going to fit my money. It's not going to fit what I do. I would love the client. Like, Matt's got some great clients, but these guys, a lot of those guys are a little, they're better fit for Matt. For us, the ideal scenario, like if they're truly ideal scenario, give me like 10% LTV, a 750 credit score, and like $1 million in liquidity. It's very rare. I get one of those a year, right? But the majority of, a good borrower is character. You pass the C's, right? So your character is strong. You can tell, any of us can tell in 30 seconds on the phone if we're dealing with somebody that can get themselves out of a bad situation. If it's a bad situation, that we do this all day long. So we know right away who we're talking to. So, that comes with being a little bit polished. That comes with, hey, I'm going to send you these docs, these files right now. You're going to have this in your inbox in 10 minutes. They have all the right answers to the right questions. Their construction numbers are on point. You're not shorting construction and saying, hey, it's a $15,000 reno and you're paying $30,000 too much. So these things come up in conversation that we all spot very quickly. So it doesn't have to be that guy that I was joking about being, 10% LTV, 750 credit. It could be for us, it could be, 600 credit, whatever. Clearly I know by speaking to them, I hear them through the numbers. I can understand their numbers. I know my own comps, so I'll pull comps while they're on the phone. And I'm looking at it going, yeah, you're in the right ballpark. So as that stuff starts to add up in the phone call, you become an ideal client versus, like Matt said earlier, you might, have a 520 credit score and you want 200 grand. And even with a great deal, you're not an ideal client. You're going, man, that doesn't sound like hard money, but that's, I can tell you what happens in my world. In the event that you come in with those red flags, my secret number in my head is dropping on the phone because you're just bringing the risk level up by having that happen. So like that initial call, even though it's very quick many times, or you may not feel like you're being probed for information in any way, or you're not giving up too much information, come to the conversation. The ideal client comes to the conversation prepared and researched. So you could be brand new with us, but if your numbers are lining up very well to my numbers, and this happens all the time, I know you spent the time and gave the respect to ask for the 200 grand or whatever it may be, and we're speaking now the same language, whether you're brand new or not. That's kind of what I look like or look at.
Oh, Martin, you're muted there, or you're very quiet.
No.
Oh,
Yeah, the mic. I think something's going on with the mic, maybe.
Something changed in the past 30 seconds.
Yeah. Well, Martin, whenever you get on, we'll continue on. You might have to fiddle with it a little bit, but as Martin's working out his mic here, we spoke about the customer. What about the deal? Like, is there percentages you're looking for? What are the numbers that you're trying to walk through? What are some of those ideal? Like, what's the ideal deal for you?
That's a good question. So I'm gonna go super basic. We could go granular, but to keep it high level, whenever we're looking at a project from a lending perspective, with what's our risk tolerance that we feel comfortable with, what's our appetite, and then also from a borrower and investor perspective, is this something that's going to be profitable and comfortable for them? We use this LTV. You hear the word loan to value. Whenever we're looking at a project, there's this spread that we're ultimately looking for in the project, right? There's costs associated with a project. If it's a value add and you're buying something for X and you're going to put in Y, there's some sort of a construction budget. There has to be enough profit there for it to be worth your time and energy and all the headaches that can potentially occur for it to be worth it for you. For us, we are always looking for that magic number around 70-75%. And I'm talking about gross, just total project costs, without getting into the nitty-gritty details, all the different fees, all the different costs. If you're going to buy it for 100 and you're going to put in 50 and you're going to sell it for 225 or 240, whatever the number is. If you divide those two numbers, your total project cost, into the final value, what you think it should, when you pull your comps, you do all your research, you find out what this thing should sell for at its highest and best use, you want it to be around that 70-75% number. Because ultimately with us, we're going to have our borrowers bring some money into the game in most deals. Maybe it's 10%, 20%, whatever it may be. There's also going to be the financing costs, the closing costs. So we want to make sure that there's enough juice in it for you. You know, when you squeeze it at the end of the deal, you want to make sure there's enough juice in it for you. But typically we're looking at that 70-75% number for the spread when you look at total project costs.
Got it. Ian Martin. Martin, is your mic working yet?
It should be. Is my good now?
Yeah, he's
Yeah,
good.
you're good. You're good.
Give him the stage. Yeah, go ahead.
Good. I apologize. I couldn't hear the question because I was fixing my AirPods.
The question was, well, you can tackle both. Who's your ideal customer, and then what's your ideal deal look like?
What does my ideal look like? So look, I mean, we can work with almost anybody. I'm just going to add to those 4 C's a little bit. You know, also looking at the condition of the property, the capacity of the borrower. But we can work with, you know, we can mix in somebody's score, somebody's capital, somebody's experience. You know, I'm sure you know we can go up to 90% of the purchase, 100% of the renos. We could go up to 75% of the ARV in most states. But you know, we can work with anybody as long as they have that capacity to execute the deal, to be profitable. We're gonna be speaking to any of all the borrowers to get to understand them, and like Ian said, we're gonna hear that in the first 30 seconds to identify, to make sure that they know what they're talking and they're speaking with, you know, with an educated deal.
Thank you. Fantastic. I mean, Ian, do you have anything you want to add from like an ideal deal perspective? You know, we've talked about loan to value of 75%, you know, and the cost makes sense. Is there anything else that you guys are looking for inside of deals that, you know, will swing you one way or another?
You know, I'm very, very focused on, you know, when I do my underwriting, I'm very focused on the comps. So it's really, I'm going to look at an area or a block if I'm in the city or something, and, you know, go, what kind of, it's really hard to explain what I'm looking for in the deal based on the numbers without like doing like actual comparables on, you know, the MLS and so forth. Cause it's kind of a feel, and I just know what I want, what I don't want. I can tell you what I don't want in a deal. I don't want a deal, like there's some areas of like Brewery Town, Philadelphia and stuff that you're just like, man, like, because what happens is you get transitioning areas. I don't like transitioning areas. I like transitioned areas. So when you get into a scenario where all these houses on right over on this block are being picked up for like, something's going on the screen. Can you hear me?
I hear you. We hear you.
Yep, we can still hear you.
Okay. So what happens is, you know, all these houses are being picked up for 20 or 30,000. So when you have like an expanding area or an area that's like developing, right? So M&M was like the big partners that came into like Brewery Town and dumped all this money in there. And Alan Dom says it best. He's like, you put a pebble in the middle of a river or a lake, and it spreads like this, right? So everything on the outside, everything in the center is pretty insulated. So I like to be closer to the center when possible. And what happens is when you get further outside is where the cowboys are, because they're still trying to buy at $20,000 or $30,000, because the people that they're selling to don't know yet that the property values are about to jump by like $200,000 or $300,000, right? So the problem with that is somebody goes, hey, I got comps over here. I got like a 20 or 30,000 over here, and then a 200, 100, and a 150. And you're just like, what is this house worth? And you go to the block and you go, how did you possibly sell a house for $300,000 on this block? It's crazy. So because it's in this transitional period, your cowboys and risk are on the outside. What happens is during a time like COVID or during a time like 2008 or something like that, when it shrinks or when it gets hit, the outsides shrink inwards. So those guys that paid money on the outsides lose their values, and it comes back this way. So the closer I am to the center of an expanding market, the more comfortable in the deal I am. I know it's a lot of answer to that question, but I like to be where like, I don't want to be the one guessing what the potential value on the property is. I like to say, hey, I know what this is worth. You know what it's worth. It is not a risk. It is not a bet. It is not a gamble. It is clearly worth this. I don't want to gamble with you, like, and I'll just say, like, unfortunately it's a gamble. I call it speculative. None of us are speculative. We are in the business of like sure bets. Put the money out and make sure that money comes back. That's what we want. We don't want your house, and we certainly don't want a house that gets pulled in on, a drop in the market. So the ideal scenario is in a nice, insulated, established market at the right price. Probably 30% ARV is probably your pickup price or something like that. Pretty common.
Is there, since this is SJREIA, is there areas in South Jersey that you guys try to stay away from for anybody who's looking to potentially flip a house or renovate to become a landlord in any particular way?
I mean, you got some obvious spots that, and this, no, I always tell people, look, I don't want to lend there because the reality is I can't liquidate that house very clean, right? And that just means that there's not a high owner occupancy in the area. But there's sections of Camden, there's sections of, in North Philly, there's sections I just won't lend in because if I take the house back, there's no room to exit that property, and there's nobody that's flipping it. It's not a flip area; it's a rental area. Now you can make a fortune as a landlord, but it's just not the kind of lending that most of us tap into. I don't know about you guys, but I think of the three of us, I'm probably the most aggressive in that lower tier. But maybe I'm wrong. I don't want to speak for you guys.
I mean, look, I always tell the customer I want to get in the market trends. Is it a flipper's market, renter's market, seller's market, so they can make an informed decision, and that's what we provide for them also. So that helps them, decide better.
No, go for it. Whoever, I think it was Matt.
I share some of the same sentiments that Ian was sharing, and there are some high risk areas, and for us, obviously, we would love to lend everywhere, but just for us, there's some areas that are just a little bit more riskier for us from with our managing our portfolio. And, obviously we have to make some of those tough decisions at times. So whether it's some areas in Camden or Trenton or Atlantic City, or, just really, really small loan sizes, we can't really do some of the, our minimum is around that 100,000 mark when you're looking at purchase and rehab. But it's just some of the high crime areas or something where if we find it's going to be a problem, like you were saying, Ian, sometimes we'll stay away from those areas.
Yeah, boarded up areas.
I think it's very relatable to, I do property management, and we have some customers that'll come to us and say, like, look, there's a lot of money to be made in Salem City, and can you manage out there? And I'm like, you know what? You can manage out there and tell me how long you want to be in the business for, and we'll see how it goes. It's very, very relatable. I think it's a good point for everyone to take too, because there's a lot of times like you see wholesalers try to sell a deal that it does look like it's very potentially profitable, but like how much is it in that area that is transitioning, that is just coming into the close of becoming a homeowner occupant area. I think an area that's relatable to this is like Gloucester City for all of our South Jersey people, like the 300, 400, 500 blocks on the east side or the west side of the train tracks. That was very much a renter's market. It's just transitioning now. And I think the only people really flipping in there are a few cowboys that are doing flips in that area. And they are being successful, but a lot of them are doing it not with hard money. They're doing it with their own cash that know that area like the back of their hands. And then, you buy a deal out there that's not potentially, if you did it incorrectly, you got your comps wrong or you got that block wrong, now you got to go pay that back, and no hard money lender wants that.
Like one thing I always stick to, because I've been around the, different avenues in investing, like when I wholesaled and then when I built a management company, like what I learned from that, and not just meeting a bunch of different people and different investors and so forth and selling back in 2008 and 2007 to like other, killer investors at the time, like that's how I cut my teeth in the business, was that your personality really has to line up. You can make millions in any avenue of real estate investing, but your personality should match the avenue that you choose. So like you said, like you have guys in Salem City, there are guys making millions in Salem City that fit, and they've been doing it for 30 years. And the look, like they're disgruntled, they're angry, a little bit. They're like rough around the edges. They probably drive a Ford, old Ford pickup truck because they don't want to spend more than $5,000 on their next, there's like a personality that fits that. And just like that in lending, quite frankly, is not sexy in the business, right? Like we're not in a sexy business. We're in the business of like moving paper around, but the three of us are risk adverse individuals. We probably have similar personality traits that fit into this because I enjoy doing this. Property management, you're in property management, man. I built like that. There are a lot of moving pieces in property management. It is an operation driven business. Flipping tends to be more of like I call them cowboys, but like the guys that like to hit home runs, the guys that like to be like, I got to make like 50 grand on this deal. I want to make 100 grand on this deal. They get that rush out of that. They might not be like micromanagement type guys. So I find that each type of investing, when you find the personality that meets it, so I don't want to like knock anybody for making their money in a tough area. There's plenty of millionaires there. If it fits your personality, it works. If it doesn't fit your personality, it will chew you up and spit you out faster than you could imagine. Or that if you haven't gotten that, or if you have been spit out before and you're watching this, you know what that feels like. It's tough. That in property management, you watch your owners get the owners that should not be in certain areas get eaten up. Other ones, they handle it just fine. So anyways, that was something I've always believed in is in real estate investing.
Absolutely true. We are coming up to the 45-minute mark, so we're coming to the close here. But I think there's one thing that's worth getting into, and I don't know if any of you guys do this hard type of lending, but we've mentioned flippers, we've mentioned landlords. What about wholesalers, new construction, note holders, tax lien guys? Can they use your services at all? And if so, what does that look like? Like, how does your lending potentially help them out?
Anybody?
How does our lending help out for what part?
So we've talked about flippers and landlords. Do you guys have any products for wholesalers, new construction people, notes, tax liens guys? Like, do you have any lending products for that? Any of you guys? And what's that kind of lending product look like?
So, I mean, for wholesalers, look, they're selling a contract. We just started about 2 months ago doing a same-day transactional funding. So that's what could help them, so they could buy and sell it the same day and not having to close on the property. So that's something we do. For wholesalers, we have a free website for wholesalers to put up their properties up there. We have thousands of investors on there, so they can put it up totally free. And we have an email blast, so we could email their properties out there. We could put them on our subscription base, and we could send it out to our investors as well. That's how we help out the wholesalers. Landlords, I'm sure again, it's all about the hard money, the bridge money, quick, not credit sensitive, no financials are required. Tax liens, I do not do. And what was the other question you asked?
For new construction, do you guys do any hard money lending for new construction?
So, I mean, yeah, I'm back in it right now. 65 of the purchase, 100 of the development, not to exceed 75 to 80% loan to cost, 1 to 4s. So that's what I'm doing right now, currently, mid-COVID.
Yeah. Something that Marty was sharing about a hard money lender or a lender in general, what we do is being able to get, if you're a wholesaler and you want to get, if you have a contract, if you have a property, you want to get in front of an investor, one of the best places you can go to is go to a lender, because ultimately we get phone calls all day. Do you guys have any deals? Do you guys have any? I get phone call after phone call after phone call every day. Do you have deals? Do you have deals? And we're always, if you have projects, we also do have a wholesaler MLS website. Marty was sharing that below. So you can always ask a lender, what are some different ways that maybe I can work with you? Maybe I can't get some money from you directly, but like he was also saying about the transactional funding, we do some A to B, B to C's. If you need that money, same day close, we can offer that as well. We do that. New construction, we have seen an uptick in new construction recently. Over the last couple months, if you've been following any of the real estate trends, the market, obviously we're at a historical low with housing, especially entry-level housing inventory right now. Last year was a low, and we're actually now even lower this year than we were last year. So there's a real pent-up demand for entry-level housing. And I think what you're seeing is there's a lot of real estate indicate or KPIs that are showing that there's been a lot of new housing starts recently. And I think that's been translating to us because we've been getting a lot of phone calls asking about, can you guys do new construction? Now, for us, I just want to preface that when we do lend on new construction, it is not for anybody. And there's a reason for it. Obviously, when you're just flipping a house and you're doing some lipstick on a pig, or maybe it's a little bit of a heavier rehab, new construction is a different animal. And for us, when we lend on new construction, it's for an experienced operator that we've worked with, or they can show us, a track record of experience in the past. They have good, strong financials. They have good credit. They've shown that they're worthy of being able to do a project like that. So we do lend on new construction. We have amazing terms and a great program, but obviously, certain benchmarks are going to need to be met with that.
As far as like what we do, I guess so tax liens would be the only thing in there that I probably can't get my hands on. I do sheriff sales, mortgage sheriff sales, because I don't use appraisals, which allows me to handle that. And I can close in same day. I've closed same day before. 24 hours though, I say give me a little space if possible. So the speed, I guess, that I have is an asset to really anybody. Transactional funding we do as well. But the speed is really probably the biggest thing for like a wholesaler. Somebody calls me the day before and says, hey, I need to close this tomorrow. I've certainly done that quite a few times. So that would be, but as far as like specific to individuals that, I would just say if you need speed, like that's something I'm capable of. Not that it's very rare. Like you would think like, oh, wow, you close in 24 hours. But the reality is like very rare if somebody needs to close in 24 hours. So any of the three of us, our time frames are completely suffice just fine for 99% of the deals out there.
Yeah, absolutely, guys. Let's hop into a few questions, and then I'll let you guys I'll let you explain where people can best reach you. So the first question we have is from Jim Mark over here, and he asks a great question: how do I become a hard money lender?
I got an easy one. You can work your way up. You can start off if you're starting off as a wholesaler and you start building up some cash, and then all of a sudden you start flipping properties, and maybe you hold on to some properties, you invest in some rentals, and now you got some cash flow. You've got some excess cash available. Start lending it out. I mean, anybody can lend. Obviously, understand that it is not as. I think some people think that it's just super easy thing to do. You just lend out the money, you come back, you make your rate of return. There's a lot of risk. There's a lot of stuff that goes into it. It's very sophisticated. And if you don't have your, systems and processes in place, it can really be a pain. But as a hard money lender, build up some cash and you can lend some money out. I've seen a lot of real estate investors that have actually lent out privately, as a part of what they're doing.
Yeah, I guess it depends on your end goals. And I kind of like snickered when they asked that question, because I'm just like, man, there's a lot of moving parts and a lot of risk on the back end that doesn't seem like the case, because you just think, oh, I'll lend against it, I'll have first position and I'll make my money back. And I've seen private lenders really make a mess of things. So there's a lot of moving parts to do it in volume, I think. But I would say, like Matt said, I think one of the best ways you could protect yourself is know the market you're lending into. So even if you don't have like the moving parts correct in terms of like maybe, your docs aren't as tight as they should be, or the process for like draw schedules isn't where you need them to be, or the borrowers, aren't structured the way through via experience. If you know your market, you can at least truly protect yourself on an asset. One of the toughest things that I see happen is some guy sells a business in a totally different industry, maybe has $1 million, wants to deploy it on the street, gets somebody's opinion on a house, doesn't really know what it's worth. Next thing you know, he's into it with some guy, because there's a lot of people that will take your capital with bad deals. Puts it into one of those deals, and he goes, well, I'll get my money back. It's worth 200 grand. You're like, dude, that's worth 100 grand. So you lose 100 grand instantly because he didn't know his market. He would never have done that deal if he knew his market. And one of the best ways to build that up is, like what Matt said, is do some wholesaling, flip some houses, and stay where you know. So at the very least, the values of the money that you're deploying, and you can go, if everything else you're not unsure of, you at least go, I know what this house is worth, and not, I really know what this house is truly worth. And that's important to know.
I think they both said it very well, but it's not, they're becoming a private lender, not really a hard money lender, just to add to that.
Great input, guys. Donna asks, are you able to provide lines of credit on free and clear rentals in good neighborhoods for people that have good credit?
I'll start off. So the word line of credit, what we can do is we can utilize some of the equity that's built into that property. So if that said property was worth 100,000 and you wanted to go pick up another property and the subject property, maybe you needed 20, 40, 50,000, we could potentially cross collateralize those two properties and use the equity in lieu of cash. Line of credit, I anytime I hear that, it kind of makes me go a little crazy, because ultimately line of credit, every lender is going to do their due diligence, not just on the investor, but also on the property. So just giving it like a blanket line of credit and just cutting a check, I know some people offer that, but ultimately the process is always going to be the same. They're going to vet the operator and they're going to vet the deal. So even if they say you have a line of credit, they're still going to be doing their due diligence. But what we can do, and I know Ian also does this as well, is we can potentially use some of the equity from that property. We would cross collateralize the two properties, and we can do that in lieu of cash.
Great point. Great point. Anything else to add, guys, to that? I think Max nailed it.
Yeah, you got it.
Yeah, it's pretty much, yeah, that's answered well.
All right. Don asks, and Martin, maybe you want to just tell everybody, how do I get on your buyers list? Because I believe you're talking about your web. All three of you guys can speak to this. You all have deal funnels that come in from people potentially. Is there ways that you can end up on it, or how do people get on it?
Yeah, so if they just go to our website, expresscapitalfinancing.com, there's a subscription list, and they'll be notified every time a property comes on the market, their city, their state, their price. That's how they could do it. And if they want to list their properties, can I say the website? Would that be okay? You want to mute?
Absolutely. Sorry, I was muted.
Great. Okay, so if they want to list their properties, whether they're landlords, property managers, wholesalers, flippers, it's called findthatflipdeal.com, and they can post the properties up there for free. And just all we ask is if they sold the property or reduced it, to please either take it off or show it as a reduced price.
Ian, Matt, any additional areas that
we don't do like these guys do. These guys, we should like, you're like inspiring me to like put, but I don't really we don't really put properties out too much. I should do that, but I just that's not really, I'll leave that to Matt. It's more Matt and Martin.
Yeah, I'm going to be perfectly honest with you. That is not our core business. It's not a primary focus for us on a daily basis. It's really a value add in addition to just some of the stuff we do. At the bottom of our website, if you go to www.alphafunding.com, you scroll all the way down to the bottom and it'll say subscribe. And what you'll do is obviously we'll have you on all of our newsletters. Sometimes we have people that say, listen, I got this deal. What we'll do is we'll shoot it out to our whole database. We do have that website, Wholesale MLS. We are looking to revamp it. It's a little bit dated. It was actually an intern a couple of years back. I think it was actually pre-me, probably 4 or 5 years ago. It was an intern that built this basic website where you could just kind of like a Craigslist on steroids. You could list the property, show a picture of it, purchase, rehab, ARV, what you thought as the wholesaler, whoever you were that was logging in and posting it, and then somebody could contact you directly. But we're looking to revamp that in 2021. But if you ever want to just subscribe and be a part of our newsletters, just go on the website, scroll all the way down, and you can enter your email in.
Yeah, but just to add also, everybody has to network, whether it's, through live webinars or events. Networking is an opportunity to grow, and that's where you're going to meet other wholesalers, other landlords who want to sell or buy properties. So, that's what it's all about. Just to add on my website on the bottom, we have affiliate partners like roofstock.com and foreclosuredaily.com. And this is a value add. We don't make any money on that. That's just for investors, to find properties live 24 hours, especially during these times. Everybody's looking to either keep their jobs or, find a new job, and they want to be real estate investors. So we found that to be a value add for them to getting that information on their phones so they could see, actual properties up and ready to go, pre-foreclosures, foreclosures, tax liens, probates with ARVs and rental comps. And that's all they have to do is now do the due diligence and look at the property.
Awesome, guys. Well, thank you so much. It is the hour, so I want to give everybody the opportunity to say, hey, where can everyone reach you at? Matt, let's start with you again since you started off the webinar. Tell us where everybody can get a hold of you.
Yeah, you can reach us on our website. A lot of people visit our website. It's www.alphafunding.com. You can email any one of us at any time. It's info@alphafunding.com. And our office phone is 732-657-2014. And, would love to go over any opportunities with you if you have any.
So anybody can reach us at info@expresscapitalfinancing.com. Our main number is 718-285-0806. If anybody's looking to get qualified, proof of funds, that's what we're here for.
First, I'd like to say, so thanks again for having us on. And I also want to say with Martin and Matt, I appreciate you guys. We have good relationships, and I really enjoy having you guys in the business in general. So it's good for the business. It's good for the industry. It's good for the area.
Oh, yeah.
So, but if you want to contact me, my website, our site is hardmoneybankers.com. Ended up being a good domain name. My email is ian@hardmoneybankers.com or 215-839-3271.
Awesome. Thank you guys so much. I really appreciate all of you three of you getting on here, giving great input about hard money. I've learned a thing or two. I hope everybody else learned a thing or two. Again, this was an SJREIA webinar. This was recorded and it'll be available for anybody to watch after the fact. And again, my name is Mike Bonadies. I'm with Chera Property Management and Side by Side MRO. You can follow me at SBS MRO or at Terra Vestra Rentals. I'm going to stay on. If anybody wants to, have any questions about anything or network at all, stay on for a few minutes. But hey, if you guys are done for the night, hop off. And thank you so much for your time.
Thank you. Thank you so much.
See you guys.
Take care, Mike. Take care.
Take care,
See you,
guys.
Matt. See you, Martin.
Take care.
All right, take care. Thanks, Mike.